This content is brought to you by Algorand, which is building the future of finance. Algorand is one of the leading projects in the crypto industry. It is getting significant adoption and investments. This content is also brought to you by TaxBit, which is the leading tax service provider in the crypto industry. I'm personally a TaxBit user. It makes it so easy to plug in my exchange accounts and calculate my crypto gains and losses. So if you'd like to learn more about Algorand and TaxBit, please visit the links in the description of the podcast and YouTube video. Hi, everyone. Welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. With me today is Greg Dickerson, who's an entrepreneur, real estate developer, coach, and mentor. Greg also has a YouTube channel and podcast where he discusses crypto, stocks, and real estate, and much more. Greg, great to have you on the show.
Hey, Tony, thanks for having me. It's good to be here.
Greg, as we were discussing before the recording, I've been watching a lot of your content recently, and I felt you have a great pulse on what's happening in many of the different markets, the macro view as far as what the Fed is doing, and what's the impact on stocks, crypto, and the economy, and so forth. So I'm excited to speak to you and get your perspective. But before we get into all the details, tell us about yourself, where you're from, and where'd you grow up?
Yeah, so I am a serial entrepreneur, real estate investor, and developer over the past 20-something years, since 1997, when I began my entrepreneurial journey. I bought, developed, and sold over 250 million in real estate using my own funds. I've done hundreds of millions beyond that with investor capital. I've started a dozen different companies, started and bought and exited. And, I do all kinds of things, real estate, I invest in companies, I invest in crypto stocks, things like that. I'm a macro investor, so I look at the entire global macro picture to make my investment decisions. Originally from the Hampton Roads, Virginia area, military family. My whole family are all natives of the Virginia Beach area. My dad was military, so we moved around, lived in California as a kid. Then I grew up in Pensacola, Florida, 5th grade through 11th grade, where my dad was stationed. And then I moved back to Virginia Beach, did my senior year of high school. And then I graduated high school and went right in the Navy right out of high school. So I didn't go to college. Got out of the Navy. I worked and I did retail in the Navy. We took care of all the ship's stores and barber shops and vending machines, things like that. And when I got out of the military, I worked in restaurants, and I always had a side business in construction along the way. And then in 1997, I started a little remodeling handyman company on the Outer Banks of North Carolina. I'm sure you're familiar with that. The number one owner demographic down there comes from New Jersey and Pennsylvania, or the visitor, the summer vacation. Number one demographic is New York, New Jersey, Pennsylvania. And the number one owner demographic is Virginia. But anyways, I started a little remodeling handyman company down there, turned that into a $30 million company in over 7 years, and started 12 other companies along the way, sold all that, reinvested the profits into real estate, grew and scaled my real estate from there. Didn't do anything in stocks until the bottom of 2009, when we had the crash of 2009. That's when I entered the stock market for the first time, and I've been playing and swing trading ever since. And first heard about crypto, I guess we'll get into that in a little bit, but first heard about that in 2015. Didn't really do anything with it until this past year, March of 2020 at the bottom. That's when I kind of jumped in and started making some moves in crypto. But that's me in a nutshell. In my channel, I talk about all kinds of stuff: entrepreneurship, real estate, cryptos, markets, leadership, mindset, just all kinds of different things.
That's awesome, and quite a resume. As far as real estate, do you consider that to be your kind of biggest or main business right now, in addition to mentoring and coaching and so forth?
It has been over the years, and not so much now. I'm not a boomer. I missed that cutoff by 3 years. I'm 54, so I'm kind of in the second half of my life. And what I'm focused on now is I have created a school of entrepreneurship. I coach and mentor people all over the world doing all kinds of different things in real estate, in other businesses, helping family offices invest. A lot of them are getting into the crypto space, so I do advise some people that are investing funds and wanting to get into crypto, or people that are already in crypto and things like that. So I'm not an investment advisor or financial advisor, but people will retain my services to help them make some decisions and things like that. So that's kind of what I'm doing. So my biggest focus now is managing my investments moving forward, and I'm really excited about a lot of different spaces in crypto not specifically Bitcoin necessarily, but other aspects and areas of crypto that I think we're going to talk about today.
For sure. Now, you mentioned you came across Bitcoin or crypto in 2015. You didn't really take a position, but what sparked the interest within the past year or so that you started dabbling in it?
Yeah, that's when I first heard the word Bitcoin, but it wasn't explained to me. Nobody said, hey, go read the white paper. Here's what it is. Here's why it was created. Here's what the technology is all about. Nobody explained it. They just said, yeah, I made a bunch of money. I put 10 grand in and it's worth 800,000 now. And I was like, what? And, and then I don't know what the price was back then. It might've been $4,000 at a peak or whatever. I don't know. But anyways, it just dropped back down to nothing shortly afterwards. And I said, oh, this is crazy. And then CNBC started talking about it a little bit. So I kind of followed it from that point on. And I saw 2017, 2018, what happened when it hit, $20,000, and I saw it drop and then, ultimately drop off again. And I said, well, that's just too volatile for me. I wasn't interested in something that could drop that fast, that far. And again, I just didn't understand it. And I didn't put the time into understanding the space or what was going on. And back then it was, Bitcoin and Ripple, right? That was really, well, Ethereum, I guess, but mainly it was Bitcoin and Ripple that were your two big ones that had the most attention and excitement. And then, fast forward to the March, bottom of 2020, I was watching things happen and trying to decide what I was going to deploy some capital into. And I was looking at markets and I was looking, at Bitcoin again, and I started studying it. And I looked at it and I said, it seems to me that there's a bottom that's being put in at Bitcoin at that 4,000 level that it's just not going to go below in the worst economic situation you could possibly imagine. The world was coming to an end economically, or so it looked like, at that time period with the pandemic. Everybody was just bailing into cash and selling everything, but it didn't go below $4,000. And then the last time, 2017, 2018, it didn't go below 4,000. So I'm sitting here thinking, okay, I think I'm pretty safe. It's not going to zero. And I still didn't really know that much about it, from a technology standpoint then, or the rest of the space. But I said, this is probably a good time to enter. So, I deployed some capital in there once it bounced off the bottom, and I, deployed a little bit in some stocks. And then I've, just been kind of getting in and out swing trading ever since, and educating myself and learning more and more about the space and about technology and about Bitcoin and, DeFi, metaverse, NFTs, all those other things, and kind of honing my skills here recently in the down market, which is much more difficult to trade, if you're doing swing trading and getting in and out. So it's been a lot of fun, and I'm just kind of honing my skills, building my knowledge base, and getting ready to really enter the space once we, get through this little down cycle and rebound and start moving back into another bull market.
So are you more of a swing trader versus a long-term holder, or do you have a balance in your portfolio where you're doing both?
Yeah, I'm strictly a swing trader, and by nature, that's been my business model my entire career. With businesses and with real estate, I'll get in low, add value, and sell. And then my goal has been to compound cash. And, for me, at the time period that I started paying attention, a long-term strategy wouldn't have really made sense. We're back to where we were, a year ago in terms of values. A lot of, Bitcoin specifically, you go into the cryptocurrencies, a lot of the altcoins are back where they were, right after that initial, bounce out of the March bottoms.
Yeah, for sure. Can you tell us a bit about which specific cryptos that you're swing trading? And if the list is too long, maybe your top 5 or so.
Yeah, I'll just give you a couple. I keep it mainly to the large caps. So I've been, getting in and out of Solana. I made my first trade in Solana at like $65. And I don't know, I think I doubled that and then sold, waited for it to drop, did it again. So, I kind of do those things. And, so I played with Solana. I've done a little bit with crypto.com. That might be a long-term hold, with all the excitement, and especially the Super Bowl. That might be one, and I'm not telling anybody to do anything, but that may be one that'll get a little pop with all the Super Bowl ads and excitement there. So some of the cryptos that are sponsoring, teams around that environment would be good ones to get in and get out of. But, right now there's so much uncertainty in the regulatory environment, in the global economic environment, things like that. I'm not sure which ones I would be comfortable with long term, because I don't know where things are going. But right now you can get 10, 20, 50% in a day on a lot of these coins in and out. So I've been having a lot of fun doing those, but mainly the large caps.
Yeah, I've also, and I've been sharing this with my listeners and viewers, I've been swing trading a lot more. I have my long-term hold coins that are locked up in a hardware wallet, but I've been swing trading and making great profits. Like you said, it's really you could use the volatility to your advantage.
Oh, it's a lot of fun. I mean, like I said, even if you make 10% a day, if you take $1,000 and compound that 10% daily, you got a lot of money real fast. So when you're using bigger numbers, you don't need to make huge moves. So when you're deploying a lot of capital, you can make smaller chunks here or there, and it works well. Then to give you an example of where I come from, so in real estate, I used to build $1 million beach houses, and I'd go out and I'd borrow $1 million to build a house. I'd have to put $100,000 into it, and at the end of the day, I might make $200,000 or $300,000 after 9 months. So now you can take that same $100,000 and you can make $20,000, $40,000, $50,000, in a day or a week. Do that a couple of times. I mean, you can make a lot more than 300,000 in 9 months off 100 grand, if you know what you're doing in the market. So when you look at it from that perspective and think about other things that other people are doing, and back to your question about a long-term hold, I didn't get into the space early enough to have any kind of a real long-term horizon. Because a lot of these coins have a limited upside as the markets mature, and as these assets mature, your returns are diminished over time. So right. Lengthening cycles, definitely diminished returns. So, I'm just not sure what the long-term upside is of a lot of these assets. And at my age, I can only think, but so long-term, because I have needs and I have kids and college and things like that and expenses and stuff. So I have to generate, to not have to dip into my stores.
Yeah, absolutely. One quick question though on that. You're mentioning you're swing trading, you're flipping or doing real estate, and you have a large position in cash. But with the inflation that's happening right now, are you putting that respective cash into any specific assets or any type of financial program, whatever it may be, where you're growing or helping to preserve the value, if that makes sense?
Well, once you get to a certain point, that's not even an issue. But for me, it's real estate. So for me, long term, where I know I'm going to get sustained growth, tax benefits, and cash flow, it's real estate. So ultimately, that to me is the ultimate store of value. And, I'm going to do a video one day on, Bitcoin and crypto versus real estate. And to me, Bitcoin is digital property. That's what it is. Bitcoin is digital property. It's a digital asset. It's right now it's a risk asset. It's earning its wings as a store of value, but it's not there yet. Once it becomes more stable and more reliable as a store of value, I might switch to more of a mindset of storing some value in Bitcoin. But right now, you just can't beat real estate. You can leverage, you get tax benefits, and that's another market that's been nothing but up since the history of time. Numbers gone up in real estate, and it's gone through some cycles. It's never gone through 90% as a market in terms of commercial or multifamily or residential real estate. It's never lost 80 to 90% of its value, but it sure lost 50% of its value in 08, 09 in some markets.
Yeah, and I think I've seen a lot of crypto investors who are taking profits. They're looking to real estate, and I have the same mindset. I have an investment property that I rent out, and I want to expand my real estate holdings. So certainly, moving profits from from crypto into real estate, it makes sense.
Well, the same thing happened in the dot-com bubble. So back in 2018, 2019, when the dot-com bubble happened, or no, I'm sorry, when was that? It was 2000. Back in the 2000. I had people that were coming down the Outer Banks, and they took all their money out of the market before the crash, and they were buying beach houses and building beach houses, and they were hiring me to, do the work for them. That's where I kind of learned, a lot about markets and a lot about investments and things like that from the people I was working for. But that's where a lot of the money came from. And then now I'm coaching some people around the country and around the world on that very topic. They've made significant gains in crypto, and they're like, I want to invest in some other assets and kind of diversify. But so I'm helping people do that in terms of buying companies, doing some real estate plays, and just kind of helping them think about, how to appropriately exit some of their positions and deploy that capital. So yeah, at some point you want to spread it out and diversify a little bit and some hard assets.
For sure. So I'm going to ask you a question. I don't know how much you can divulge here, but what do you consider to be your best investment to date, given that you've diversified into real estate, stocks, crypto, and so forth?
So, right now the best gains are crypto. I mean, you just can't find those gains anywhere else if you know what you're doing. Even, and I'm not talking long-term buy and just wait. I'm just talking about swing trading. It's incredible. It's mind-boggling what you can do swing trading in crypto right now. And I don't use leverage, no leverage at all. I don't long, I don't short. I just buy spot in and out, and I still get those kind of gains. But from a real estate standpoint, some of my best deals have been, in real estate, because I've done them without any money. That's what's interesting about real estate is you can do big deals in real estate without any money out of your pocket. You can, leverage that, and it's all about knowledge and having the right deal and understanding the space. And then businesses, you can start businesses with no money, with almost nothing, start a business, buy a business, and grow and scale that very quickly and exit. So I've had big hits in each of those spaces, but I like to be intellectually stimulated. So I've really dove into the crypto space over the last couple of years and really studied it. So I'm preparing for some big moves in the crypto space that I think are going to be way exponential to anything I've ever done in the time period that I think some of these things are going to come to fruition. So I'm really excited about that. To me, it's venture capital. It's just a lot of fun.
Yeah, indeed. I'm having a blast doing it. Certainly the returns are nice. And on that note, where do you feel we're at in the crypto market cycle? Some are saying Bitcoin is headed into a bear market, but we still have an alt season that may be coming. There's a high correlation between the crypto market and stocks now, and it's affected by what the Fed is doing from a macro perspective. What is your perspective on all these things?
It's a different space than 2018, 2019. That was primarily retail driven up to that point. And even in that point, over the last couple of years, it's more institutional driven and more professional investment driven by investment banks, things like that. So in terms of a bear market and what we know is a true bear market, I'm not so sure that we'll see that. Now, altcoins are different. So Bitcoin is one thing. So Bitcoin has reached its 4.236 extension from the last cycle. So it's, from all intents and purposes, the bull market's over. The top was in at 69 for this cycle. The question is, what does a bear market look like for Bitcoin now? And I think that's what it's trying to figure out in terms of diminishing returns, more stable store of value, less volatility as more capital flows into the space. The biggest thing we're missing is, and I guess we're going to talk about that too, is regulation in order for it to fully mature. So I really don't know what the future of the market looks like for Bitcoin. I do know right now that what a lot of people are expecting and analysts are looking at is a retrace. We're going to bounce at some point. I did call a bottom on January 14th. I said that 36,000 range, I think, is our local bottom before we get a retrace. And ideally, after that retrace, we should roll over and go back and test prior cycle lows. And if we do that, then we've set a big market structural bottom at that point, which I think we've set one right now at 30,000. But if that breaks, I think 20 is going to be your next test of a big market structural bottom. If we don't break that, then you may see a bear market that's just a consolidation phase that never goes below 30,000 again at some point. And then, we just need to see where it goes next time to find the peak. And if you go by normal Fibonacci extensions, once we go through this retracement and bounce, once we find where's our market structural bottom, because when we test that next bottom, that's probably going to be it, after that retracement. So we bounce here, retrace, and then we go back and find a bottom. That bottom is going to be your long-term market structural bottom, barring an economic event like March 2020, barring any kind of a market meltdown, global conflict, another pandemic. Normal market cycles, we're going to find that structural bottom that Bitcoin probably will not break moving forward. Then the question is, how far do we go? And the answer to that question is, liquidity coming into the space. We don't have the Fed anymore. We've got quantitative tightening. We don't have, the Fed put driving, the asset like we did 2020, 2021.
Right.
So I think it's going to be much slower to reach those next levels of a reasonable Fibonacci extension that will take you to 79, 80,000 on the next run before we see any kind of a dip, and then continuation from there. So I think right now, a reasonable expectation is a bounce into the 50s. We should drop back down, test the lower levels, find a market structural support, and then we'll be off to about an $80,000 range before we see any kind of a big correction again. That's kind of what I'm thinking.
Sure.
All things being equal, given the environment we're in now.
So to confirm, you're saying the bottom's in, retracement to the 50s range, a slight pullback, then a move up to 80, and then we head into that bear market?
Yeah, that's what I'm saying. And I think the bottom at that 36,000 range is a local bottom that we're going to touch again and then be off into that retracement. So we're working our way back to it right now.
Got it. And then similar to what we've seen historically, are you expecting, an epic alt season to follow Bitcoin's correction after it hits its retracement top?
Yeah, what we saw before was everything went up all at the same time. Boom, just everything ran. And we've seen a number of altcoins, Ethereum included, and the total too, the altcoin market cap has already seen its 4.236 extension from last cycle. So that would tell you that the top is already in for the altcoin market as well. But what we've seen recently that we didn't see last time is several coins have run on their own, and they're continuing to. So it may not be the altcoin season that we know of from the last cycle where everything just ran. It might be just a few that haven't gone already that are going to run. So I would be looking at the ones that already ran and look at the ones that didn't, and maybe kind of like watch the ones that haven't run. I mean, you watch them all that's in your pocket, obviously, or your portfolio, but there are ones out there that haven't run yet that I think are might be the ones that would go on a big run, after Bitcoin does its retracement.
Got it. Yeah, that makes sense. Like you were saying, like Luna was going nuts, and Solana, some of these were just moving on their own. Ethereum's
already done it.
Yeah. As far as the correlation between stocks and crypto, any thoughts on why that is happening at this point? It's just highly correlated. Is it because of the institutional money?
Yeah, because of the investment banks, institutional investors, more professional investors and traders, and the capital that came into the market 2020 into 2021. It was all Fed driven. I mean, it was $1 trillion pumped in the markets. So just like capital rotates in the crypto market, the same thing happens in the stock markets. Crypto now is like a tech space for capital to rotate through, from growth to cyclicals to tech. So it's kind of a rotation. And, Bitcoin was tracking with the NASDAQ pretty good, but it does deviate here and there. But it's just a rotation of capital. It's the space is risk on. So it's a risk asset. So when dollars are looking for yield in a risk environment, it's going to flow into crypto and Bitcoin. When dollars are taking risk off, it's going to flow out. Same thing happens in the markets.
Like you said, there's some deviation at certain points. I'm just very curious as to if this pattern will continue, and it seems like it will as more institutional capital comes into the crypto market.
Yeah, and we saw it, March 2020, markets dropped, crypto dropped, markets rebounded, crypto rebounded. It's just more exponential in the crypto space of those drops and those rebounds. So, as long as you start to understand that, and it's not a bad thing. I mean, there's a narrative in the space where people just don't want to see that or understand that, but you absolutely have to be able to make good investment decisions. There's nothing wrong with it being correlated to the markets. That's actually a good thing because it kind of helps you predict things and kind of see where things are going. And it seems like here recently, Bitcoin has led the markets. So it's kind of really interesting how that's been working.
Now, I want to come back to crypto, but since we're talking about the stock market, what is your outlook on the stock market, given that it is so tied to the economy, and we had a not so great jobs data this morning, and I don't know, maybe the things with the pandemic get better, but a lot of people are not really going back to work. What's your outlook on the stock market, and are you bullish or bearish?
So I am, right now, probably a little more on the bearish side in the short term until we see how the Fed's going to react and what they're going to do. Inflation is real. It's a real problem. It's a global problem. It's not just the United States. It's being felt around the world, and central banks and governments around the world are acting and reacting to inflation to try to curb it. The Fed has planted a flag and said, take some profits. We're going to have to make some moves. We're going to have to battle inflation. And they said we have a lot of room to raise rates because the economy is strong. So until we get to March and see what they actually do, we're not really going to know. I think the market's kind of in a little bit of a consolidation phase right now, rebounding a little bit. Maybe it overreacted a little bit, setting up for an announcement from the Fed in March. And if the Fed just kind of stays the course, doesn't really do a whole lot, markets will continue to kind of drift a little bit. If they come out and raise rates, 0.25%, you might see a little bit of a drop. And then, kind of waiting for the next move from the Fed. If they come out and say, we're raising it a 0.5 point, we're stopping our asset purchases, and we're going to start reducing the balance sheet in a timely fashion, you're going to see another big drop, 15-20% in the markets. And then that's going to be the test to see if the Fed's going to reverse course. So the markets are going to test the Fed and see if they are going to reverse course. The question is, when's that going to happen? Probably after the next meeting. So we'll get another big leg down in the markets. That's if everything else around the world is consistent. If Russia invades Ukraine and we have global conflict, depending on how bad that looks, markets could, sell off and kind of go to cash for a little bit, waiting for that outcome. We've got some bad inflation prints. We've got bad job numbers right now. So, there's a bit of uncertainty yet. And I think the March Fed meeting is going to, set the tone for where markets will go in the near future. But right now, without the Fed pumping liquidity in the markets, it has to deflate. It's got to deleverage. Valuations were only as good as the interest rates are low. So all of these valuations that we've had in stocks, in companies, PE ratios, multiples of earnings, all those things, they only made sense because interest rates were zero. So if rates go up, those multiples have to come back in order for everything to make sense. So it's just a deleveraging. It's not a crash. It's not Armageddon. It's just deleveraging.
Yeah, that absolutely makes sense.
And real estate's going to do the same thing. Rates go up, prices of real estate goes down.
Yeah, because one of my questions for you was going to be, what's your outlook on real estate this year? So just like you said, depends on what happens with rates, right?
It is. And real estate's hyper local. So every city, every state, city, neighborhood, block, and location on the street on that block, all of that varies. But on an average, for residential real estate, people are buying payments, the average house. So you have to buy on, a debt to income ratio. So you can only afford so much house based on, interest rates determining what your payment will be. So as the rates go up, payment goes up, you can afford less house, brings values down. That's why values on houses have been so, inflated like they have over the last couple of years. And then you have in certain areas, with the pandemic, inventory levels have dropped to record lows because people are moving into the Southeast states, places like, well, not just Southeast, but Arizona, Nevada, New Mexico, Texas, Tennessee, the Carolinas, Florida. So you have a lot of people flooding these markets, and then you have people not moving because of the pandemic and other reasons. So we've never seen inventory levels like this before in the country. Then when you add to that unbelievably low interest rates, it just drives demand through the roof. So we're already seeing that tide shift a little bit. Mortgage refinance rates were down recently. Rates went up, so mortgage refinance applications were down. And then all of a sudden we got a little pop because people know rates are going up a little higher. We're starting to see more houses come on the market in some areas. Some areas are still very hot. So it's very, very localized in terms of where that demographic is growing. But the bottom line is, as rates increase, people's affordability drops, so prices will come back. It takes a little bit of time, but it happens. And then, we will start to see inventory levels climb and things like that, and that will affect values as well.
Not to poke or prod for your secret sauce or your plans, but any hints as to what your strategy is for this year as it relates to real estate?
Yeah, as far as real estate goes, I'm on the sidelines right now. I'm waiting for values to come back. I've been through this before and I've seen the cycles, and I don't have to do anything. So I'm a value opportunistic investor. I look for value wherever I can find it. So I don't have to make any moves. So it's a very good place to be in. I can wait, I can be patient, and I have no problem not doing a deal until I get, the right deal on the terms that I'm looking for. But, I'm always looking at deals, always, doing different things. And I have clients that are that I'm coaching that are doing different business models than me. But right now I'm just kind of waiting to see how this all shakes out, because I know there's a big change coming.
Okay, so let's switch gears back to crypto. I wanted to ask, because, looking at some of your videos, you seem to understand charts very well. I'm curious how you gained a knowledge around that. And for those who are looking to learn about technical analysis and market cycles and so forth, what would you recommend?
Yeah, so I'm not a technical analyst. I'm not an expert by any means, but I study some of the best out there that are very good, very sound from a technical analysis standpoint. I've interviewed several on my channel. And, I just kind of learn from them, learn by watching and reading and studying and things like that. But I follow other people's, TA, and you do a great job, and just learn by watching, and then started playing around with TradingView and had no idea what was what, and just kind of learned it myself along the way.
One other question I wanted to ask you, what exchanges and platforms are you using for your swing trades and to do things along those lines?
Yeah, I use Coinbase Pro, and I like Coinbase Pro because the fees are very inexpensive, and the more you have to play with, the cheaper your fees get. And then you can set limits and stops and things like that. Again, I don't use leverage. I don't do any of that. I'm just spot. So for me, my entry into the space, it was a safe platform. They have insurance. They're a United States company. They're public. They have their issues like everybody else, but that was the one I felt most comfortable with. And like I said, once I got used to making investments and deploying capital, that just made the most sense for me, and that's why I use that one.
Got it. Let's talk about crypto regulations in the United States. There's a lot to uncover here. We have the infrastructure bill debacle. We have the SEC, Gary Gensler going after crypto projects, specifically altcoins, Ripple, Terra Luna, and so forth. Then you have some Democrats introducing the American Competitiveness Act. And there's things where the Treasury wants to be able to control and reverse payments. But we see a lot of members of Congress are waking up to Bitcoin and crypto, and they're becoming Bitcoiners, if you want to call it that. Different bills are being introduced by different politicians in different states. What is your take on what's happening? And also there's the looming executive order from Biden. Could be good, could be bad. What is your take on all of that?
So ultimately, in the long run, proper, prudent regulation is a good thing for the space, because it's going to help bring clarity, which helps bring more capital, more adoption, and more people into the space. So ultimately, it's going to be a good thing. And with, government, there are always unintended consequences with good intentions, and it's arguable how many intentions are good. But yeah, on the good side, there's a lot of states that are trying to introduce Bitcoin as legal tender. That's going to be a fascinating study to see. It's a constitutional issue, to see how that works and whether or not they are successful in that bid. A lot of politicians are using the community for their own gain so that they can get votes, and using it as a platform for campaigning. So a lot of it is they have no intention of doing anything. They're just tapping into that community because there's a lot of votes. So there's a lot of that going on. But as far as regulation goes itself, and what Biden specifically is doing, and what Gary Gensler is doing, number one, we need clarity in terms of who is going to regulate what. You have the CFTC, you have the SEC, you have the banking commission. So everybody is kind of trying to say, well, who's got authority where? So we need to figure out, the number one thing they want to do is regulate companies and exchanges in the United States. So that's number one. They want to provide clarity there. They want to provide regulation. If you're going to mine, here's energy standards, here's, environmental standards you need to adhere to, just like any other company that is, using energy to produce goods or a service, so there's clarity and guidance that's needed there. Tether is a big question, and how these stable coins are backing the issuance of their coins. So we need transparency. They're looking for transparency and auditability there. So that's a big thing that they're after, because there's a lot of speculation on these stable coins, what they're actually backed by, and what this commercial paper really is and how liquid it is. And for people that don't understand, like Tether is backed mostly 50% by commercial paper, which is a loan to a business. It's just a note. And a lot of people say, well, notes are liquid. Sure, they're liquid, but not at face value. Right. When you have to sell a commercial note, so if there's a run on Tether and they need cash, they have to raise cash, and they have to liquidate their commercial notes, they're going to sell for 10 cents and 20 cents on the dollar. So that's a problem. The face value of the note is what they're recording on their books. But if that company goes out of business, or if the company's valuation drops, well, then that note loses value, and they're not marking those notes to market. So that's a big problem that there's no guidance on. So a lot of people don't understand is that's really what they're after. What they're really after is, a lot of these companies are fraudulently operating. So they just want to rein that in. And, it's not going to eliminate all of it. I mean, the stock market's manipulated. There's a lot of bad actors there. You saw the New Jersey deli that, was a public company and sold a bunch of stock, and it was a little deli that was doing nothing, raised how much was $100 million or something.
Yeah.
Yeah. So regulation in and of itself isn't the end all be all, but what it is it's rules of the road for broad scale adoption, which is what the space needs. For number to go up, you need liquidity. The biggest put in the market is gone. The Fed is out of the game right now. That's $1 trillion that's not coming to the markets that, potentially has impacted crypto, a portion of it over the last, year and a half. So you need that guidance in order to, bring more liquidity into the markets.
Yeah, absolutely. And do you feel that the reason why maybe the SEC hasn't approved a Bitcoin spot ETF is because of the reasons you mentioned with maybe Tether and other stable coins, and they're trying to make sure all of that is in order before they do something like a Bitcoin spot ETF?
I think that's the biggest reason. They're citing it in all of their, letters of declination whenever they reject these applications. So I think that's the biggest part of it.
What are your thoughts on NFTs, and are you planning to invest in any of them?
Yeah, I mean, I like NFTs. I think that is one of the most exciting aspects of crypto. And I think we're just at the beginning of what those can really be and where they're going to ultimately go. So that's a fascinating space. I've got some projects myself. I'm not really, ready to talk about them yet. Ideas that I'm working on to do some NFT projects. Yeah, fascinating space. Now, I'm not going to go buy a Bored Ape or, anything like that, because to me, some of that stuff's going to go to zero. It's just a fad. And it's a trend, like we've seen in a lot of other areas. And, there is a lot of, money laundering going on there, like with the rocks and stuff. And there's a lot of illegitimate stuff going on, so you got to be careful and understand what you're getting into. But yeah, I think that space has a lot of potential. I think it's just scratching the surface. And that's one of the areas that I'm going to create some projects in.
Very cool. Well, I'll definitely want to talk to you about that offline. What are your thoughts on central bank digital currencies? They're taking the blockchain, they're tokenizing their fiat on it. And it seems like every central bank around the globe is going to launch this. Do you feel it's going to be complementary to the crypto market?
Well, I think it'll, complementary to the crypto market, I don't know, but I think that's where, we're going. We're going, to a fully digitized society in areas that we can be. Not everybody has access to, phones and internet and things like that, but most places do now. So I think a digital currency just makes sense in terms of transferring peer-to-peer, peer-to-peer payments, which is what Bitcoin was really created for. So I think that's a great thing, man. If we could eliminate credit card processors and all that, just imagine a merchant not having to pay credit card fees anymore by the exchange of a CBDC. So I think that's big. Also, country to country, currency exchange, things like that. So I'm not sure it's going to affect or impact the crypto markets, but it could enhance them by becoming stable coins in and of themselves. So you don't, like, I just use cash. I don't buy tethers. I don't use USDC. I'm in and out of cash. So, for me, it doesn't really matter. But if it's a digital cash or dollars, to me, I'm already using digital dollars on the exchange. I wire the money from the bank and I use that to trade. I'm in and out, the token to cash. So I don't even use stable coins. So I'm not sure it's going to impact the crypto markets or space, but it's definitely going to help just in general to consolidate a lot of things in terms of how we do business with each other globally.
Yeah, and I think, like you said, like maybe not a direct impact, but an indirect. Also, the government's going to help spread the knowledge and educate people about here's why your money is now on the blockchain and how it's tokenized, which further validates the crypto asset class, right? I guess if you want.
It does. A lot of people are afraid of crypto and don't understand. But yeah, if the government has a crypto, a stable coin, then that helps people. Wow, and people are already using digital payments. I mean, you can use your phone with if your card's in there. The key is eliminating the need for a bank and banking fees and credit card companies that are charging fees. That's really the key, and where we're headed. And I'm not sure, that's an interesting solution there.
For sure. Final question here before we hit the wrap-up questions. What are your thoughts on all these services that are launching around Bitcoin mortgages, essentially being able to use your crypto holdings as collateral to get a mortgage? And given that you're in the real estate space, what are your thoughts on this?
Yeah, I think it's fantastic. Like I said, I'm working with some clients that would love to do that, and they can't. Banks don't want to do it. Lenders don't want to do it. They're not efficient right now because the volatility. And what happens is if you use your Bitcoin to try to purchase real estate, and that Bitcoin loses value, then you have to come to the table. It's a margin call. You got to make them whole and either add more Bitcoin or pay down a little bit. There are some companies that are talking about having limits to say, as long as your Bitcoin doesn't drop more than 20%, we're not going to have a margin call. But if it drops below 20%, you're going to have to bring that balance up a little bit because they're ultimately secured in the real estate. So in that, normally you have to put 20% down on a property, conventional mortgage, typical. They might require 50% of it to be Bitcoin. So they're going to want you to reduce the equity, have a bigger down payment in that cryptocurrency. So I think that's a huge opportunity, but it's going to be a little bit more expensive. You're going to be required to have more leverage, or more equity in that property bigger down payment when you buy it. But I think that's a huge, huge opportunity. A lot of people want to do that and won't have to pay capital gains. They don't have to sell their cryptocurrency in order to buy real estate.
Yeah, that absolutely makes sense. I'm looking to explore some of that to see, like I said, trying to use my crypto to get into more real estate. So that's something I'm exploring as well. But we'll see, which one of these products gets approved and gets up and running, get some validation behind them.
And just understand that. So a bank, they can't take your crypto and hold it. You can pledge it as an asset, to secure the loan, just like the real estate is an asset securing the loan. The problem with banks holding crypto is that from a regulatory standpoint, they have certain assets that are not A-rated, that they have to have twice as many reserves on balance as they do of that asset. So if a bank's going to hold Bitcoin, and let's say they have $1 million worth of Bitcoin, they have to have $2 million in reserves, for every $1 million of Bitcoin they hold, just to hedge that volatility. So that's a very tricky thing. But I think as we go along and we get more regulation, we get more clarity and adoption, I think you're going to see more availability and opportunity in that space. And that's another space I'm looking into because that's a huge, huge market.
Yeah, absolutely. That's a great point you brought up with the regulation and the reserves they would have to have. And it reminds me of what I think recently the FDIC chairwoman had said, that they're looking into how they can enable banks to hold crypto and to have that insurance, like the traditional cash and assets and so forth. So I think that's in the works, and we'll see if something comes out this year. Okay, for the wrap-up questions, if you could create your own metaverse, what would the theme be about?
Well, we're already in the metaverse. We've been in the metaverse for a long time, and we just didn't know it. I mean, we're sitting here talking. Right? Yeah, exactly. We're sitting here talking today. So to me, the metaverse is the digitization of everything and peer-to-peer, where there's no third-party intermediaries between you and me, being able to conduct business anywhere in the world instantly, transferring not only money, but assets. So being able to digitize any asset, whether it's digital or hard asset, in digital form, and being able to transfer that asset anywhere in the world, around the world. So to me, I'm an entrepreneur. And, and I'm a relational guy. So it's all about relationships. So it's all about being able to function in a way that everybody can connect around the world, exchange goods, services, and value instantly around the world without any third parties, or any fees or anything like that. That to me is kind of where I see the metaverse. It's much more than just virtual reality and gaming. It's huge. And we haven't even scratched the surface of where that's going. That's why you see the capital, the talent, and the attention going. I think metaverse is the biggest opportunity in crypto that people just don't even really understand fully where that's going.
Yeah, we're seeing almost every brand now is looking to throw their hat in the ring. Nike, Disney, everybody's jumping in.
Yeah. It's the digitization of everything, everything. So it's just huge. And we're just not even close to scratching the surface of that one.
For sure. All right. Rapid fire questions. Favorite food?
Favorite food? Steak.
Favorite musician or band?
Favorite musician or band? Man, I don't even know. That's a hard one. I like them all. That's a hard one to nail. I don't know that I have one.
Favorite movie? That might be a hard one too.
That's a hard one because there's so many good ones. But I go back to the old ones. Top Gun.
Yeah. Favorite book?
Favorite book? Probably The Power of Positive Thinking. Norman Vincent Peale. Think and Grow Rich. I mean, it's a couple of them. Aside from the Bible, of course, and Rich Dad, Poor Dad. I mean, those are my 3 core books that really shaped who I am and my ability to do what I've been able to do.
And finally, what do you do for fun as a hobby, pastime, when you're not doing real estate or crypto trading or anything like that?
So this is to me, this is what I do. I love it. It's engagement, it's entertainment, but I've been a lifelong surfer. I love to ski. I play golf. So I get out and do some things, but to me, what I do is my hobby. I love this. I love helping people. I love pouring into people. I love building things, whether it's real estate companies, projects, and it's just what I do. So I'm doing it right now. This is what I do.
Awesome, Greg. Pleasure chatting with you. So much insightful information, and appreciate your perspective on the economy, markets, real estate, stocks, crypto. Thank you for joining me today.
Thank you for having me. It was a pleasure to be here.